Hi guys, welcome back to my YouTube channel. This is JSRL Raz, and in this video, we will continue our discussion about the dealings in properties, particularly on the sale of shares of stocks not listed in stock exchange. So in our previous videos, we have discussed already the ordinary assets and the capital assets. We know that when we say ordinary assets, these are either inventories or properties, whether real or personal properties used in business. They can be for sale or they can be held for the use in business. On the other hand, when we say capital assets, these are neither inventories nor properties, whether real or personal properties used in business. Also, we have discussed the tax treatment for ordinary gains and ordinary losses. We have mentioned that every ordinary gain and ordinary loss are added and or deducted from our gross income. We have also mentioned that the application of creditable withholding taxes for the sale of real properties, either inventory or used in business. So the CWT can be 1.5% or 3% or 5% depending on the price of an inventory, which is a real property. Or it could also be a 6% CWT if it is a sale of real property used in business. In our second video lecture, we have also discussed the tax treatment for the capital gains arising from the sale of real properties classified as capital assets. And we know these capital gains or capital losses are not added to our gross income because the sale of real property is already subjected to the 6% capital gains tax unless the 6% CWT applies. Also, we have discussed the 6% CGT and the 6% CWT for the sale of real properties classified as capital assets. We know that if it is a sale of real property classified as capital asset and the sale was made to a government or any of its political subdivision, we know that the seller has the option to choose whether the 6% CGT or the 6% CWT. And finally, we have discussed some requisites or requirements to be exempted from the 6% capital gains tax. So in this video, we will focus our discussion more on the sale of shares of stocks which are not listed on the local stock exchange. So this is the concept map about the sale of capital assets. So the capital asset may be a real property or incorporeal property or a personal property. When we say real property, these are immovable. These are assets or properties which are permanently attached to land, such as the house or the land itself. We know that the real properties which are classified as capital assets are subject to 6% CGT or 6% CWT optional to the seller taxpayer. And when we say incorporeal properties, these are properties which have no physical substance, such as shares of stocks, which is our discussion in this video is all about. We have not discussed yet the personal properties classified as capital assets, and we will discuss this in our another video. I will link that video here. So if it is a sale of incorporeal property, that could be subject to 15% capital gains tax if the stocks are not listed in the local stock exchange. And if it's a sale of personal property, then that could also be subject to normal tax. So please tune in for that video because we have a discussion about personal properties classified as capital assets. But in this video again, we will focus more on this item. So let us start our discussion by asking, what is a share of stock? A share is the single smallest denomination of a company stock. So when we say share, this is a unit or the smallest capital, equity capital in a company. It represents equity ownership in a corporation. So if you want to be a stockholder or an owner of a corporation, you need to have a share in the stocks or in the equity. Because without that share, you cannot be an owner or you cannot be a stockholder of that corporation. You must own at least one share of stock. This share is evidenced by a share certificate. That certificate is just a piece of paper indicating how many units or how many shares you are holding in that corporation. And without that share certificate, you cannot be called a stockholder. So according to Revenue Regulations number 6-2008, shares of stock shall include shares of stock of a corporation. So we know that the equity of the corporation is divided into units. So for example, a corporation can have 100,000 shares with a par value of 100 pesos each. So that 100,000 shares times 100 par value, that is the authorized share capital of a corporation. A share of stock can also include warrants and or options to purchase shares of stocks or units of participation in a partnership, except general professional partnership, joint stock companies, joint accounts, joint ventures, taxable as corporations, association and recreations, or amusement clubs. Any unit of participation in these organizations are also considered as shares of stock or a mutual fund certificate. A stock, classified as capital asset, means all stocks and securities held by taxpayer other than dealers in securities. So there are two types of people why they are holding or why they are investing into stocks. They could be dealers whose purpose is to buy and sell stocks. Their usual business is the buying and selling of stocks for a price, for a gain. So we are not discussing about dealers in securities. In this video, we will focus on those taxpayers who are not normally engaged into buying and selling stocks for a gain. Meaning, we will be discussing more about those taxpayers whose purpose why they held these shares of stocks is for investment. Okay? So, when we say dealers, dealers means a merchant of stocks or securities, whether an individual, partnership, or corporation with an established place of business, regularly engaged in the purchase of securities and the resale thereof to customers. Again, when I say dealers, these are people, whether individual or partnership or corporations, who are regularly engaged into buying and selling stocks or securities. Again, we are not talking here about those dealers in securities. In this video, we focus our discussion on those taxpayers who are purely investing in securities, in shares of stocks. So this is a summary tax treatment for the sale of shares of stock. So again, shares of stocks are incorporeal properties, and we need to know what kind of shares of stock is being sold. If it is a listed share, this could be subject to 6/10 of 1% of the gross selling price. This 6/10 of 1% is not a capital gains tax. This is a stock transaction tax, a percentage tax, which is based on the gross selling price. But if the shares are unlisted shares, this could be subject to 15% capital gains tax based on the net capital gains. So these are the two tax treatment for the shares of stocks. So remember that this is not a capital asset, okay? And this is the capital asset, which is subject to capital gains tax. And these two taxes applies if the seller is not a dealer in securities. Again, this only applies when the seller is a non-dealer in securities. So, what is that listed and unlisted share? So, when we say listed shares of stocks, this is a share in a company that can be bought and sold on a particular stock market. So, when we say listed shares, these are shares of listed companies. What are those listed companies? Example, Ayala Land Corporation, Globe Telecommunications, SM, we have Robinson's Land Corporation, BDO, and of course Jollibee. So these are just some of the blue chip companies in the Philippines. all these companies are listed companies. Why they are called listed companies? Because they are those companies which are in the list of the Philippine Stock Exchange. Meaning, these companies which we called as listed companies are publicly owned corporations. Meaning their shares of stocks are available for the market to invest. And what is this stock market? This is a market wherein the shares of stocks are being sold. In the Philippines, we have only one stock market, and that is the Philippine Stock Exchange Incorporated. So let's talk about Philippine Stock Exchange Incorporated. This is a self-regulatory organization that provides a fair, efficient, transparent, and orderly market for the buying and selling of securities. So in short, Philippine Stock Exchange Incorporated is actually a market. So imagine if you go to public market, you would see people selling fish, meat, vegetables, and other grocery items. You would also see people buying those fish, meat, vegetables, and other grocery items. So there is a crowd of people buying and selling anything for food consumption. The Philippine Stock Exchange Incorporated also acts as a market. But in that case, not the fish or meat are being sold, but the stocks of corporations. So imagine this is the PSE, and then these corporations would go to PSE to sell their stocks. Why would they need the PSE? This corporation would want to increase their equities or to increase their funds, so they need to get the attention of the public so anyone can buy their stocks, because when the corporation is a publicly traded, anyone can just buy stocks from them. Anyone could just invest on their equities. So when the equities, when the shares are available to public, anyone can just go inside. And when anyone can just go inside, there is a large influx of money to the corporation issuing those shares. Okay, so normally a corporation would go list themselves in the PSE so that there will be more equities, more investment from the people outside of the corporation, especially when they need more funds. So this corporation would list their company and then also would sell their stocks in the PSE. The PSE will act as a market and would invite people for outside the market to buy the shares of stocks. So people can go to the PSE and buy the shares of stocks from different corporation, or they can also use the online platforms. There are many brokers, there are many online platforms where you can actually invest into stocks. For example, we have the COL Financial. You can go to their website, you can sign up for application, and you will only need 1,000 pesos to invest in stocks. So with just 1,000 pesos, you can actually become a stockholder of a corporation. You will just select any kind of stocks or any listed share that you want to purchase, and you could be a stockholder or an investor. So according to our tax code, for the sale, barter, or exchange of shares of stock listed and traded through the local stock exchange, there shall be levied, assessed, and collected on every sale, barter, exchange, or other disposition of shares of stock listed and traded through the local stock exchange other than the sale by a dealer of securities. So let's hold on. So in this specific provision of our tax code, it says that there should be a tax on the sale of shares of stocks which are listed in the local stock exchange, especially or particularly for those sales made by a non-dealers of securities. Take note, other than the sale of by a dealer. So meaning if you are a dealer in securities, this tax will not apply to you. This tax will only apply if you are not a dealer in securities. So what kind of tax? A stock transaction tax at the rate of 6/10 of 1%. based on the gross selling price or gross value in money of the shares of stock sold. So if the shares sold are listed in the local stock exchange, then the tax applicable, especially if you are not a dealer in securities, is 6 over 10 of 1%. Okay? So if you are an investor, and you hold investment in shares which are listed or publicly traded, and you sell this investment, these shares, you could be subject to 6 over 10 of 1% based on the gross selling price. So let's have an illustration. Baymax is a non-dealer of securities. During the month of September, he sold 2,000 shares to Doraemon through the Philippine Stock Exchange. So the shares are listed in the stock market, and Baymax is a non-dealer of securities for a selling price of 130 pesos each share. Baymax acquired those shares of stocks in the stock exchange a month ago for 99 pesos. So we'll compute the percentage tax or the stock transaction tax. So how should this be done? So our solution would be sales. We have the 2,000 shares times 130 pesos. So we would have 260,000 multiplied by the percentage tax, which is 6 over 10 of 1%. And that 6 over 10 of 1% is actually 0.006. Before the train law, that tax is actually 1/2 of 1% or 0.005. So under the train law, it is increased by 0.001, okay, or 1 over 10 of 1%. So in this case, the percentage tax due, the stock transaction tax due, is 1,560 pesos. This is based on the gross selling price. So Baymax would now receive 260,000 pesos less 1,560. So that is very easy to memorize because you will just have to multiply the 6 over 10 of 1% to the gross selling price for listed shares. How about unlisted shares? So unlisted shares of stocks. Unlisted shares are the shares of companies which are not listed on any stock exchange. Hence, they are not publicly traded. So in contrast to listed shares, these unlisted shares are shares of companies which are not listed in the Philippine Stock Exchange, meaning their shares are not publicly traded, meaning these corporations are not open to public. They are privately owned and only a limited number of people, which by legal provision, a maximum of 20 persons. So examples, family-owned corporations. So family-owned corporations are of course not publicly traded because their shares of stocks are only owned by a family member. Example, we have High Ramp Distribution. This is where I work. So High Ramp is a distribution business focused on BMEG products. So we buy and sell, we distribute BMEG products like Integra and so on. And also we have AM Enterprises. So these are the two companies where I work. And these two companies are both family-owned corporations. So Hiramp is focused on the distribution, while AM Enterprises is focused on the franchise of Caltex. So again, these are just some example of family-owned corporations. In your locality, there could be a lot of corporations which are also family-owned corporations. And always remember, family or privately owned corporations are all unlisted companies. They are not listed in the Philippine Stock Exchange. You cannot buy stocks on these companies through the Philippine Stock Exchange. Okay? And their shares are not listed. So let's consider what the provision of our tax code for the sale, barter, or exchange of shares of stock not traded through the local stock exchange or unlisted shares. So the provisions of Section 39B of the Tax Code as amended by the train law, notwithstanding, a final tax rate at the rates prescribed below is hereby imposed on the sale, barter, or exchange of shares of stock not traded through the local stock exchange. So in contrast to those shares traded in the local stock exchange, unlisted shares are considered as capital assets, and therefore they would be subject to a capital gains tax. It says that all taxpayers except resident foreign corporation and non-resident foreign corporation, so individual taxpayers, resident citizens, non-resident citizens, resident aliens, non-resident aliens engaged in trade or business, and non-resident alien not engaged in trade or business, and also domestic corporations. So these six taxpayers will be subject to a final tax of 15%. This final tax, 15%, is actually a capital gains tax on the sale of shares of stocks which are not listed in the local stock exchange. Whereas for resident foreign corporation and non-resident foreign corporation, the final tax is 5% if the capital gain is not over 100,000 and 10% for any excess of the capital gains over the 100,000. So we will have an illustration for this. So the tax base of the 15% and the 5 or 10%, so again, 15% is applicable for all individual taxpayers and domestic corporations. Individual taxpayers are resident citizens, non-resident citizens, resident aliens, and so on. And also domestic corporation. 5 or 10% is applicable only to the foreign corporations, whether resident foreign or non-resident foreign. So these taxes shall be based on the capital gains arising from the sale. And when we say capital gains, this means the selling price minus the cost of the stocks and other incidental expenses relative to the sale of those shares of stocks. So let's have an example. Juan made the following dispositions of his stock investments in various companies in 2020. So we have there issuing company, we have ABC, DAF, and XYZ company. And then those shares, those investment in ABC company were traded in the local stock exchange. And we know once traded in local stock exchange, this would be subject to 6/10 of 1%. So we have there a cost of 300,000 and the price of 500,000. We also have here DAF Corporation, which is not traded. So we have this, so this is an unlisted shares. And then we have the cost of 400,000 and the price of 380,000. We also have here XYZ company and the shares is still unlisted, and then the price for 700 and the cost was 320. Okay, we will compute the tax. So in those three stock investments sold, there is one set of stocks which are traded in the local stock exchange. So this is subject to 6/10 of 1% percentage tax because these are sold through the local stock exchange. And that is 500,000 times 0.006. That is 6/10 of 1%. So again, the tax is based on the gross selling price, not on the gain. So 500 times 0.006 is 3,000 pesos. We also have two sets of shares which are subject to the capital gains tax of 15% because these are not traded or listed in the local stock exchange. So we have here DAF Corporation, the selling price is 400 and the cost of that share of those shares were 380,000. So we have a capital gain of 20,000. We also have from the XYZ company, we have selling price of 700,000 and the cost of 320,380. So we will add this together. We will get a total net capital gains of 400,000. From then, we will multiply the CGT by 15%. This is the rate applicable for individual taxpayers, and domestic corporation. Therefore, the capital gains tax on the sale of the shares of stocks which are not listed in the local stock exchange is 60,000 pesos. So always remember, the capital gains tax of 15% is based on the capital gains. And when I say capital gains, this is the difference between the selling price and the cost and other expenses incidental to the sale of stocks. So we will multiply directly the 15% to the capital gains. How about if those stocks was sold or were sold by a foreign corporation? What if who won is a foreign corporation or a non-resident foreign corporation? So we have here the total net capital gains of 400,000 in our previous computation, remember? So the capital gains tax due would be for the first 100,000, that is 5%. So 5% of 100,000, that is 5,000. And for any excess of the capital gains over 100,000 pesos shall be 10% capital gains tax. So our total net capital gains is 400,000 and the first 100,000 is subjected to 5% final tax or capital gains tax, and any excess, so 400 minus 100,000 would be multiplied by 10%. So that is 300,000 times 10%, so we would have 30,000 pesos. So if those two shares were sold by a foreign corporation, whether resident foreign or non-resident foreign corporations, our total capital gains tax due would be 35,000 pesos. That's it. So remember, for the sale of shares of stocks traded in the local stock exchange, or in short, listed shares, those are subject to 6/10 of 1% stock transaction tax. And if the sales sold were unlisted shares, or those shares which are not traded in the local stock exchange, the tax applicable is the capital gains tax, which could be 15% if the seller is an individual taxpayer, whether resident citizen or non-resident citizen or resident aliens and domestic corporations. Okay? But the capital gains tax would be 5% or 10% if the seller is a foreign corporation, whether resident foreign or non-resident foreign. The 15% is based on the total net capital gains, in which we computed as the difference of the selling price and the cost of the shares. And the 5% or 10% is also computed on the capital gains, but the 5% applies to the first 100,000 capital gains. Any excess should be subject to the 10% capital gains tax. That's it. That's how we treat the sale of shares of stocks, whether listed or not listed in the local stock exchange. I hope you learned a lot from these video discussions, and I hope you'd watch the other videos on the sale of other capital assets. Thank you so much for watching.